Hello guys, welcome to another video. In this video, we're going to look at structure mapping again, and I've been receiving some kind of message, people asking me to explain some the kind of things about both the major structure and the internal structure, and probably the my entry confirmation, lower time frame entry confirmation, and so on. So, in this video, I'll try to cover all those things. But before we go, before we start checking it on the charts, I want to use this diagram to explain something to you guys. So, and maybe this will clear some kind of confusion. So as you can see in this video, when we are going up, when we have our impulse correction and so on, value pullback here, and as you can see, market come back for this, then market start going up. When market take out this inducement, in this case, when market take out this inducement, we mark this high as our swing high, this level as our swing high, then market mitigate POI, then close above here, close above the swing guide. That's when we confirm that this is going to be our swing low. So now, as you can see, this is a complete structure. Swing guide taken out, swing low confirmed. So if we want to continue marking this structure now a lot of people have this confusion when it comes to internal structure, because market is going from the swing low to the swing guide. Doesn't mean we just fly to that level. Market will definitely create internal structure. Is either market creates internal structure in the current time frame, like this 4 hours time frame, or market creates just impulse correction, or market creates lower time frame internal structure. But what matter is the same process is what the market will take from here to this level. So you should expect maybe the aggressive move or normal internal structure, or but all these are just internal structure. All these, all these move from here, from this level, sorry, from this level to this level. These are what I call drama. So these are what I call drama. Is internal structure. What matter is market is moving from this POI and market is taking this level out. So that's what matters. So, but you have to, if you are paying attention and you want to be scaling in, it will require a lot of practice and a lot of understanding in order to do this. So now the issue that some people are having is when the market now give us break of structure here, they will now get confused by looking at which of the structure are they going to look at for. And as you can see, you see that when market is going, market is still creating internal structure. These are internal structure. These are internal structure. This is the major structure, break of structure confirm. This is your low. So in this scenario, what are you expected to do? What you are expected to do is to make sure that you first look for your inducements. And as we explained, inducement is the last pullback that the market did before or after break of structure occur. And as you can see currently based on this diagram, inducement, this is where the inducement is, because this was the last valid pullback that the market did. And in another scenario, maybe market now do something like this and push up, then that's when you will now still take this inducement to this level. Then you will readjust your POI. And we actually said we only work with two POIs. The decisional, which is the POI that is next to the inducement, and the extreme, the POI that is at the bottom of the swing low. So, and as you can see, if this happen and this POI is still valid, then you can shift your 50-50 low probability POI here. So, this is all you need to understand about this stuff. But let's say currently, this is what the market is showing us like this. So, look at it. If you choose this POI as your entry point, you can still be right. And if you choose this POI as your entry point, you can still be right. But what you need to understand is POI, because you will be looking at this structure as your last break of structure. Let's say you don't even pay attention to the major structure. This is where you got stuck. If this happen and markets invalidate this POI, some people will mark this as change of character, which is wrong, because they were looking at the internal structure instead of looking at the bigger picture. So they will be wanting to maybe sell, maybe at least maybe POI is here and they try to sell to this level. They will not know that this is exactly the major POI that the market is currently targeting, looking for. And they will be expecting that, okay, this will be a break of structure for them. Maybe maybe they have a pullback here and they want to now sell here again. Not knowing that the market has already mitigated the higher time frame POI and this is the major structure. This is the major structure. So, and we are expecting this low to be protected. So in this scenario now, this is what they will experience. They will experience it. Maybe they place their sell here, and market will give them small direction, and market will do what? The market will blow up. So they might have a win here, but they are going to have a loss here because this movement is a temporary movement. It's just a major pullback like this. It's just a major pullback for this structure. It's just a major pullback for this structure to continue. So you have to pay attention to those things. Once you get the right structure correct, the right movement correct, your win rate will increase. You don't need to even stress yourself. You just need to follow the process and stay consistent. So in this case now, this is your internal structure. The moment market take out this high, this internal structure is none of your business again. What you need to look out for is to look out for your pullback, which serve as your inducement. Look out for the POI that is next to it, and look out for the extreme POI. So that's all you need to know about structure mapping and probably top-down analysis. So once you get your directional bias, imagine that, okay, you understand the market is moving from this point to this point. It will be easy for you, whichever time frame you want to use, it will be easy for you to trade towards this direction. But if you are consistently looking for sell against this movement, you will see you will sell here, it will be short-lived, market will take you out. You sell here, you will be short-lived, market will take you out. So you get frustrated because you are trading against the major movement of the market. So that's what this diagram is all about. And I want to dive into the structure mapping on the chart so that we can see um, the chart representative of what we're actually talking about. So if you look at it, this market has been consistently bullish, and it's very simple. You can look at it. Let's say we start from here, break of structure. Let's say we have break of structure from here. I'll be representing it with B. So, and after break of structure, what are we supposed to look out for? Let me take it like this. Okay. After break of structure, what are we supposed to look out for? We're supposed to look out for uh, our inducement, which is this the last pullback, that the value pullback that the market did. You can see. And this is going to be our low. This level is going to be our low. So we understand that this level has to be protected. And and once we are able to establish that, you can see market come back, refuse to take out this inducement and blow up and push up. That means our inducement will be here. Our inducement is going to be here. This low is still going to be valid. And what are we supposed to look out for? Let's look for our POI. No valid order block here. No valid order block here. And this is the hidden POI that I used to talk about. So what does it mean? What does the hidden POI mean? Hidden POIs is a situation whereby you can't find the major order block. You look at it, no major order block, but you find a valid pullback. And as you can see in this video, in this example, you can see that we had a valid pullback here. So that's the first characteristic. And you see that when this pullback is about to complete, market sweep this candle. You can see market swept this candle and close inside. And the wick of this candle that swept the previous candle was not retested, was not mitigated. Market do not come there. So this is the kind of candle that give me hidden POI. Sometimes if I find a order block with fair value burger, I can't find, and this is the type of POIs I also look for. And if you look at it, it's not here. We can't find it here because this candle do not sweep below this previous candle. So we can't find it. We can't find it here. We can't find it here. This is the only place I can find it. And if this is invalidated, then it's likely for markets to come and sweep this low before it continues to its previous to the bullish direction. So let's see how the market plays out. And you can see what happened again. In this scenario, you can see market creates something like this. This is not value pullback. Okay, this is value pullback, but no, this is not value pullback. This one seems to be a value pullback, but the close above, I think, is still the same thing. So, but let's say this is a valid pullback that the market created, and the market went up. So it means that this is our last low that the market created. So, and if you're looking for POIs here, I can pick this. This is the last selling candle. This is the last selling candle. This can be a POI. But this this is a low probability POI. So let's see how the market plays out. You can see You see how exactly how market mitigate this POI. Market mitigate this POI and do what? And close above here. But are we going to say we had a break of structure here? No, not yet. We don't have break of structure. Although market close above, but there is no inducement. So it means that this inducement, this low, will be shifted to this level. So it means that we have this low, this inducement will now be here. The new inducement is going to be here. This is going to be the new inducement. Why? Because this is the situation. Let me use this diagram. Anytime you see a situation whereby markets do this and close above, remember this is our previous inducement and this is supposed to be a break of structure. But look at it, this scenario. You can see that let's say this market just sweep this low, or let's say there's other block here. Let's say there is extreme order block here, and then this is decisional order block that markets actually mitigated. So this is supposed to be a complete structure, but no inducement. And this is going to be our low. Look at it. It means that we are not going to use this inducement as we are using this inducement, but based on this current situation, there's only two things that you need to pay attention to. Is it that the market will create another pullback? If market creates another pullback, then this will serve as inducement, then this will serve as your low. But in a situation whereby market refuses to create another valid pullback, this is the low that the market is going to use as an inducement. So that's why we transfer this inducement to this level, and this POI will still remain valid. Then markets can now go. So that's when we now have complete structure like this. So this will now be our new low. So I believe you understand what I'm saying, and exactly that's what happens in this situation. So as you can see, when market is going, market do not create any valid pullback. So the inducement will be stuck here, will be placed here, and this POI will also be valid, and this our low will also be still remain valid. So let's see how the market reacted to it. You can see when market got to this level, market do not slow down. So it means that this POI, which I call the hidden POI, market flush it out. But if you're taking a trade based on this POI, it's expected that your SL must be here. If you take a trade here, your SL must be below here, and you can now target this high. So, and see what market did. You can see market went up and give us straight TP, at least ratio 1 to 2, based on what happens here. The entry time, the level that we enter the market is what makes this TP to be wide. But if you're using lower time frame confirmation, maybe we will have had a trade here and still maintain our SL here. But I will talk about that later. So let's continue with our structure mapping. That's the major focus. So in this situation now, you can see that we had complete break of structure here. And where is our low? This is going to be our new low. So after that, we see the market creates impulse correction as we were going. Market creates valid pullback here. Sorry, my hand that was not straight. You can see market created valid pullback here, valid pullback here, valid pullback. We are expecting the market to come and take out this valid pullback, but it created another one straight. So this was the last valid pullback that the market created. So sorry, let me remove this drawing. So for this drawing that I used to trace it. So this was the last valid pullback that the market created. And as you can see, we just need to do what? We just need to identify it and mark it. Then mark our POIs. This is going to be our inducement. Then mark our POIs. Then wait for market to do its thing. So where is our POIs? I said the last pullback, the pullback that is next to the inducement will serve as our DPOI, decisional POI, which is low probability POI. But because I said it's low probability POI doesn't mean it's not going to, it doesn't hold. So, but we know that if market respected this one, there's high probability. Why? Because this low will be protected and this entry will give us good RR. But if it's here, you can't enter here and put your stop loss here. Definitely, if you enter here, put your stop loss here, it's kind of high risk because market might still need more pool, more liquidity. So that's why we call it low probability. So you can see. So what does the market do again? Market push down, then try to push up and create a valid pullback. And this was the last pullback that the market created. So this inducement will be shifted. We will shift this inducement to this level. We will now know whether this POI is still valid. If we have the other block here, you can see this is a value pullback and it has other block and it has fair value gap. So we can take this fair value gap, check, then we remove this one because we only deal with two POIs. And let's see how the market reacted. When market got to this level, you can see market invalidated this level. And as I said, if market invalidates your DPOI, there's tendency that market will do pullback as if this level is going to hold and market will come down. And the next target is likely to be here. It might not be get to this level, but the next target is likely to be there. You can see this. This is the last selling candle that the market created before it push up, and it has fair value gap. So in some cases, I used to cover part of those fair value gap. So, and you see, so if you're trying to buy here, temporarily market is likely going to look for sell momentum, at least. And as you can see, so if you're trying to buy here, it's going to be short-lived. And you see, market still give you hope, thinking you want to go up, and you see market drop down. Then finally, market do what? Market break this structure. Remember, I said market do not promise you that it's going to come to your POIs all the time. Why? Because market is not only serving you, and this is not the only way to trade this market. So you just need to have your own perspective, follow your plan, and when market comes to you, respect your own plan, then you execute. That's just it. Because if you say, okay, why is it invalidated this place and it doesn't come, then market might decide to this is a support and resistance. So you can see. So that's why I said everything works in this industry, in this every strategy work. You just have to pick your own and stay with your own and master your own. That's all. So what is going to happen next? We follow the same process again. We had a break of structure. So if we're positioning here, this will be a missed trade for us. Then is there anything wrong in missing trade? No. It's part of the system, the part of the game. You can miss trade, you will lose trade, you will miss trade, and you will win some trade. So what are we going to do next? Let's remove this. So for the fact that market has closed above here, then this will serve as our what? As our this will serve as our what? As our low. And this is break of structure. This serve as our low. So what are we going to look out for again? When market created this on its way to break this structure, where is our last pullback that the market created? You can see this was our last pullback that is valid that the market created. And where is our decisional POI? Is the POI, you can see this is a valid pullback. You can see impulse, this is the valid pullback. And this is the decisional POI that is next to this, our inducement. And where is our extreme? Let's look for our extreme. This serves to be our extreme order block. So, and as you can see, market just come to this level, respected our decisional POI and flash up and do what? And give us break of structure. Remember, in this previous scenario, hold on, sorry. In this previous scenario, market invalidated it and do what? And flash up. But if because we still stick to the process, we still stick to the game plan, to the playbook. You see, we might add a losing trade in this place or a missing trade in this place, and technically, you see, market actually compensates us for being consistent in this case. So it's very, very simple. You just need to be consistent with your approach and stay to one thing. It's all about perspective. This is not the only way to trade this market, but this is my own perspective. This is how I was taught, and I was able to reason with it that this is how market move majorly most of the time. Not all the time, but most of the time. So if I can stay with it, the market will create more opportunity for me in the long run. So as you can see, when this is happening, when this when market is going to break this structure, you can see valid pullback and market do valid pullback and trying to go up, but I think it fails at this level. You can see, but take out this. So this is just to understand where our last pullback is, and this is where our last major pullback is. You can see. So, and after we were able to identify our last major pullback, remember our low will be shifted to this level because market has taken out inducement. It was inducement that will determine where our low is. If the market do not take out inducement, then we don't have a low. But immediately market take out inducement, which serve as a liquidity, then we have a low according to this game plan. So, and as you can see, after this, these are noise. Market just sweep this liquidity, try to go up and still come down. Where is your decisional POI? This level. Why? This supposed to be, you can see, This is the value pullback, and this was the candle. This candle was the candle that has fair value gap. That's why we use this candle. But in a real sense, this is also a complete order flow. So if you are putting your order block here, you can cover all this place. Not only this place, you can cover all the order flow. So, but you will understand that this is your, look at this, this is fair value gap in between. So you can understand that this is your POIs. And as you can see, when market got to this level, where is our extreme POI? This level. Because this is the last pullback, this is where we have the order block. So in this case now, you can also do the same by using this complete order flow. Remember, I said order block is a refinement of order flow. So you can understand, once you understand that, you have nothing to worry about. And you see, markets blow up. So if you had a trade here like this, just direct, put your stop loss here, then target wherever you want to target. Maybe ratio 1 to 3. I always recommend ratio 1 to 3. And you see, this is how exactly structure mapping, this is what it's all about. Once you understand it, you will not need to run after the market. You will just wait patiently for the trade to come to you because you actually have your game plan and you know exactly where you want to position. So, and what makes this thing so interesting is if you have your structure mapped up like this, you can wake up, maybe this is London section or Asian section or wherever stretch section is it. But as long as market is trending in your POI, you can come to this level and look for your lower time frame confirmation. And once you have a confirmation, boom. Or you don't do that, you just know that okay, 2 POI is going to hold. And maybe you have 2% each to risk on your account. You set your limit order here, target this high, then you set another limit order in target 1 to 3. That's very, very simple because you have the right approach. You can see if this one fail, you know that you will lose 1% here and market will give you 4% here, or let's say market will give you 3% here. So you will be 2% up. So you will not have a way of, okay, you miss this trade, you do, look at this level. You will have a win trade there. You will miss it here. If you set your ambush here, you have a win trade there. It's still a plus for you. You will lose trade here and you will miss trade here. It means you only lost 1%. So in every time, you just need to understand this concept. You can structure your maybe risk man everything around this concept, and you will be profitable. That's what I've been doing for years, and I can see the difference. I can see the result. So look at it. After we had this break of structure, this is where we had last pullback, valid pullback. If you don't understand how I pick this valid pullback, I have it on my channel. You can watch it. You will see it. If you don't understand it, just drop a comment. I can still do a video or send you a kind of document or an ebook that can guide you, that will make you to understand these things clearly. So, and if you look at this level now, once the market take out inducement, it means that our high is confirmed. Take out this inducement, our high is confirmed. This is going to be our new low. Once you understand the trading range, your problem is solved. Because trading range will tell you where the market is and where the market is going. And where is our decisional POI? This can be our decisional POI because we had a value pullback there. This is the candle with order block. And where is our extreme? This is going to be our extreme order block. You can see. So you can see that this is the last candle with fair value gap. Let me remove this. This is the sorry. This is the last candle. This was the last candle with fair value gap, and you can see this exactly market mitigates this level and boom. So if you had a trade here, stop loss here, knowing that this low will be protected, you will have a successful trade here. Let's say you lay an ambush here and this one fail, you will have a successful trade here. So you don't need to have anything, you don't have anything to worry about. And what do we have here? We have break of structure. And as I said, look at it, market pull back and continue to the upside. So it means that this is going to be our inducement. Some people will say this is a break of structure. No, they don't understand this stuff. They will say this is a break of structure. It doesn't mean that they are wrong, but based on our own perspective, this is not break of structure. You will now be looking for entry here. No, that's wrong. You don't do that. Your break of structure is only confirmed when the inducement has been taken out. And after we were able to mark our inducement, where is our order block? No valid order. This is not a valid order block. and so on. Then me now, I can use this as a EDPOI because the other block there do not have fair value gap. So, and sometimes I use this space like this because I know that market might not really necessarily come to this week. So I'll cover it like this. You understand? And if I'm lucky, fine. If I don't, then it's a miss trade for me. So if I'm fortunate or if I'm lucky, market actually mitigates my POI. Maybe I set it here. So in this scenario, this thing also happened. You can see remain small market do not mitigate your order block or your entry. It doesn't mean you are right or you are wrong. That's just part of the thing that comes with the market. So you don't need to beat yourself. That's okay. Market is not this. What you need to do next is to lay another trap, reposition, mark your structure, and reposition for the same process over and over. You can see we had a break of structure here, and immediately we had this break of structure. Where is our inducement? This is going to be, because if you look at it, this is a valid pullback. This is going to be our pullback that the market, the last pullback that the market created. And where is our decisional POI? It's going to be here. Then where is our extreme? We do not have extreme POI because this is our low. Market do not create extreme POI. In this time frame, this is 4 hours time frame. So no extreme POI for me, no hidden POI for me. So, and as you can see, this is a decisional POI. So, but you will say, what's the inducement? When the market created this high, you can see create. This was our last pullback that the market created. I think I'm seeing small pullback here that the market created. So you can see no other block, no valid other block here. And probably maybe you use this as your decisional and you are looking for extreme, no valid extreme order block. If in this 4 hours time frame only, if you go to lower time frame, maybe you will see an order block here that the market is responding to. But as far as I'm concerned, based on this playbook, no valid order block here. So what are we going to do next? Is either we wait for market to sweep this low, maybe sweep this low and now give us momentum, then we can buy. But me, based on my experience and how I execute this trade, because no valid order block below here, what I want to see in this situation is I want to see an intent like this. Impulse correction for 4 hours, not a structure, just impulse correction that will show me that market is interested in going up. So if I see that market close above here like this, I can take a risk by looking for my entry candle, entry confirmation here, then join this move. I know this is going to be a risky trade, but this is how I normally approach it, and I'll target this high. And if the market close, if the trade hit SL, it's still the process, it's still part of the process. Then I will now wait for sweep of this level, then look for my confirmation, then take the market to the upside. And if the market close below here at the same time, there is nothing for me to do. If the market close below here like this, close below here, then I have change of character. Then the whole process will continue. Change of character, the same thing will happen because the market only tell us that, okay, I'm not going up again. I've been going up for a while. I want to rest or I want to pull back either temporarily or majorly. So, and what are we going to do after change of character? Let's say this happened, this pullback happened, our market closed below here. This level will serve as our inducement. And what are we going to look out for? We look out for our decisional POI here. We look for this serves as our decisional POI, then this will serve as our extreme. If you look at the 2 points, they have fair value gap. So this is what we'll be expecting the market to do. It's either here, put stop loss here, target this low, or this level. Put stop loss here, then put your stop loss here, then target this low. This is just the whole process. And as you can see, this is the same process that we'll be following to buy, and it's still going to be the same process we are going to follow to sell. But currently, this hasn't happened. This has not happened yet. So what we are going to look out for is to look out for what the market is going to be doing from this angle. So that's it for this video. It's about 35 minutes long. I think it's too long, but I hope the whole process worth it, and I hope you have um, you were able to learn 1 or 2 things in this video. Let me go to 15 minutes and see, maybe I can show you guys my the entry confirmation, how you can enter this trade. You can also enter in the same time frame if the whole thing will permit. But my concern with the lower time frame confirmation is because I'm more comfortable with 4 hours. My concern with lower time frame confirmation is sometimes you wait for that same setup and you will discover that you also miss that same setup. And I don't want a situation whereby I'll be running after the market. So look at this now. This is 15-minute time frame, and when market mitigate this POI, the easiest way is to position in this fair value gap. Position in this fair value gap. Put your stop loss. Put your stop loss here. Position here. Put your stop loss here. But the ideal thing is to position here. Then put your stop loss here. Then target high. Target this high. Or target your 1, 2, 3, whichever one you want to target. So it's still going to end up being the same. So because sometimes you will also miss this trade. Market will not even mitigate this fair value gap, and you see the way the market is going. So, and if you are a day trader, then once market mitigates this level, you know that you don't have business with selling. You just need to be looking for the opportunity to buy this trade, this setup to the upside, because the higher time frame has already uh, show you where the market is going. And in this scenario, this is what I used to do. If the, let me use this as an illustration. So let's say this is my POI, 4 hours POI, and then I have different entry model. This is my 4 hours POI, and I look at this, and 15 minutes is doing something like this, and finally maybe market mitigate this level. Close, full body candle close below here. First thing I want to see, I want to see the market take out this high. Once market take out this high, I want to see an inducement like this. Then I want to see market to come and trade below this inducement. Anything below here, I'm buying straight. That's one of the strategy. That's one of the entry model that I use. I'm buying straight. Another one is this. Another one is this. If I have a situation like this, higher time frame POI, and then markets mitigate this level like this, probably maybe market sweep this low and close above here. I'm not looking for any inducement again. I just want to buy direct from here. I want to buy direct from here in lower time frame, maybe 15 minutes. Why? Because market has already swept this low, and it sends to me that liquidity has already been taken. So I will just look for this other flow. Then I'll set my entry here, put my stop loss where it's supposed to take it. Then I'll go to the upside. And last other thing I do is when market gets to my POI, let me check 4H. If I don't want to slow down, um, if I don't want to go to the lower time frame, all I need to do, or this part of the thing I use to reduce my loss. And as you can see, in this situation now, I might not be able to take this trade here because my entry confirmation do not show up. This is exactly my entry candle confirmation. I want to see a situation whereby the market will sweep. The market will sweep, will mitigate the POI, then sweep the last candle that was created and close inside that candle. Then I can now execute my trade based on this. By that, I have a confidence that liquidity has been taken. So whichever way that comes, in this situation now, you can see this situation now, that candle confirmation is not applied. Okay, I have the candle confirmation here. You can see this is the candle confirmation that I used. You can see that this candle was swept. This previous candle that the market created was swept and market push up. But this is not the exact candle that I'm going to use. You see, this low was swept by this candle and it gave me rejection candle and close inside the body of this candle. Then this is going to be my entry. But if I put SL here, I'll be stopped out. So I'll be smart enough because the POI is big, probably put my entry here. Then I can target here. I'm just trying to show you how my entry confirmation is, at least 1 to 2. So you can see I had a good trade here. In this case now, are we going to see the same entry confirmation candle here? Let me check this candle. After we've been mitigated, no, this candle do not show. But I know myself, I will actually enter based on this candle. Because of what? When market push up, then market came back to sweep this candle and close above. This will signal to me that the momentum is already coming into the market. And for the fact that I just won't need it for an extra confirmation, I'm not just trading that candle. I just need that candle for extra confirmation. And if I take 1 to 3, you can see that I have a very clean trade. So not all the time I go to lower time frame. Sometimes I look for lower time frame confirmation and candlestick confirmation, and the whole process remain the same. And in this case, Remember I said I don't have PO high here. And in this case now, the candle do not show, but I'm seeing the very weak kind of weak momentum. You see rejection, rejection, rejection. So, and as you can see, when we had this last rejection followed by engulfing like bullish candle, then another rejection, these are the things that we'll be paying attention to. And immediately this candle show up, I will consider this candle as a candle that is going to, that the momentum is already coming into the market because it swept the previous candle and is asking us to continue buying. So this can be risky, but in this case, my stop loss is not going to be here. My stop loss is going to be here, so that I will know, even if I lose this trade, at least I lose it based on the valid entry confirmation. So, and you can see 1 to 2, 1 to 2, 1 to 3, but I would rather target here 1 to 2.5. So, so it's still a win-win for me, whichever way. Why I can't go by it, if I switch to 15 minutes, the candle will not load, the chart will not load up to this level. So these are the things I pay attention to. But I'm always confident when that candlestick confirmation show up. I'm always confident than anything. So, and as you can see, even when this one hold, you can see this is my candlestick confirmation. You can see once we mitigate, I want to see a candle that will sweep the previous candle and push in between with a rejection momentum, with a close inside the body of the previous candle. And if I take a trade from here like this, aggressively, take my trade, my stop loss will be here or below this other block. And I will still have some nice trade here, 1 to 2.5. So these are the things. Even if when this structure stand to be invalid, but by the time of placing this trade, we will not know whether it will be invalid or not. So you can see the whole process still remains the same. But what matters, how you enter the trade, do not really matter. But what really matters is you know where you are buying to or where you are selling to, the directional bias of the trade. So that's it for this video. I hope you learn one or two things. If you have any question, kindly feel free to drop me a comment or contact me through my link, my Telegram link. I will be responding to your question. Thanks for this video. Bye for now.